Hi there, and welcome to the prediction series called Polymarket 101. And today we're answering a question: how does Polymarket make money? But before we start, we need to clarify that this material is brought to you for information and education purposes only. I'm not endorsing you to commit trades on Polymarket or invest in Polymarket stocks. But if you do so, always do your own research or consult with a financial professional. Since it's settled, let's move further to the news. So this week, a major news has happened in the prediction market, especially for Polymarket. Polymarket has finally introduced fees for all the markets and all the categories. And after they did so, they have ranked number 5 between all the protocols in crypto space that are generating fees on the blockchain. So as you can see in this chart by Binance.com, then you can see that Polymarket is currently ranking at the position number 5 after Tether, which is basically a company that's providing USDT, that's emissioning USDT, or Hyperliquid or Circle protocols that you probably heard of. Since they're generating so much revenue, then they're already a profitable business. But in order to understand what are the fees and how they will look, I just want to clarify that Polymarket has an extensive documentation that sets the tone and information for how fees are different between every category that they have. But in order to visualize it better for this video, then let's go to x.com and see this chart over here. So in this chart, you can see that there is a comparison of fees between Kalshi and Polymarket. And as you can see, there are 9 categories currently, which is crypto, sports, finance, politics, economics, culture, weather, tech, and other or general, meaning that 8 categories are defined by labels, and other categories are basically the same as any other out there. Before we dive into deeply into comparing them, we need to understand how do actually prediction markets make money. And in this case, platforms like Polymarket or Karshi, they're generating their revenue from fees or commissions that they put on top of each trade you conduct, whether it's sell or buy. So every time you conduct the transaction, they take a small percentage out of it. So for instance, what's interesting is that you also need to understand that it's not a stable fee that you can pay whenever you want. Prediction markets tie the pricing to their contract price. So in this case, we can visualize it as a specific outcome, let's say 50% or 100% or like 12%, and then we can see the curve that is different. So it means that the less expensive is the share, or the less possible the outcome, the less you pay. Same, if you have an outcome that is almost 100% guaranteed, then you also pay less money than, for instance, the contract price of 50. But also, since we understand that the contract price is different between the time, then probably it's kind of like tied also to probability of the outcome. So usually the market goes to 100% the closer the event actually occurs. So it's kind of like in a timely pattern. And why we need to understand is that if you are basing your strategies on pricing, then you need to take into consideration those fees. So let's get back to the visualization. As you can see, there are 2 categories where Polymarket is actually more expensive than Kalshi, which is crypto and finance in this matter. I don't have a 100% guaranteed answer why this is happening, but probably because Polymarket uses oracles with crypto since it's on a blockchain, and maybe it's more precise information and they have like more cost incurring to that matter. But I don't know about that. But you need to know that if you're trading crypto on Polymarket, then most likely you're paying more fees or an equivalent to Kalshi and finance as well. And other categories, Polymarket is considered a more, let's say, liberal approach, and the fees are lower than Kalshi. And yeah, they're different. I'm not going to dive into details. I endorse you to go to fees, Polymarket documentation, and study. Why it's important? Because it changes a lot of things. So for instance, if you're not trading directly on Polymarket and using some kind of analytical tools like Betmore, or I know like you use Polygon and Telegram, or for instance you use Glintrain, then probably they have a terminal to trade directly from the platform. And in this case, before Polymarket has introduced fees, then you were paying a commission only for the product usage, right? So a particular product set up a commission from the trade. Now you will be paying two commissions, which is going to be the product usage and then the Polymarket usage. So probably if you are seeing that you are receiving less money, then probably the commissions are already occurring and Polymarket percentage has been added. Why it's extremely important, because if you are considering a specific strategy or using some kind of analytical tools or AI to conduct the trades, then you need to take into consideration that the fees are there already and they may impact your ROI strategy or P&L strategy. So take this into consideration. But probably you're most likely interested in understanding how much money has Polymarket made over the last year. So in order to understand that, we need to go to an analytical tool like, for instance, Dune or DeFi Llama, since these are the tools that actually pull out the information from smart contracts and see the real numbers. So in this case, since Polymarket runs on Polygon, we can see all the numbers directly on chain. So yeah, we go to DeFi Llama, and then this is the graph that we see currently. So it's Polymarket fees for the whole year. And as you see, there are two columns, which are called fees and revenue. Why they're different and what is this portion that is in between with them. So fees are basically the amount of money that is generating from fees as a commission, but the revenue is actually the amount of money that is left for Polymarket. For that particular differentiation, it's a fund that Polymarket pays for liquidity providers. And maybe you have seen in some of the order books, and there's some so-called make a rebate when Polymarket pays you a particular percentage from putting your money as liquidity for a particular market. So that's how they're endorsing for market to be more liquid by paying a specific percentage. And as you can see, starting from January to April, it was a, let's say, not such a big of an incline, right? Because they mainly were generating fees from crypto, and the more people came to the platform, the higher were the columns. But now, on 30th of March, they have introduced fees for all the markets, and you can see how columns spiked. And basically, in 1 week alone, between 30th March and 5th of April, Polymarket has generated almost $7 million in revenue, from which 6 is their revenue, and almost 1,800,000 was distributed to liquidity providers. So next week's we're gonna see how that's gonna perform, but we're experiencing that probably the column will rise again to the levels of last week. And if you are curious to understand and see what are the revenue, always go to DeFi Llama, look for Polymarket fees and revenue, and you can see all the data on chain. So now you have it. Now you know how Polymarket makes money. Now you understand how the fees work, how they're different. And now you also need to understand how to incorporate into your strategies in order to not lose that money on your P&Ls. So thank you for your attention. See you later.